Hello everyone, this is Matthew Fraley with BreakpointTrades.com. First off, I hope everyone has had a wonderful weekend. This, of course, is my technical analysis review of the markets weekend edition. It is currently March 23rd. It is around 5 p.m. Eastern Standard Time. Market futures are going to open about an hour. We'll see where they open at. But again, hope everyone had a wonderful weekend. If you happen to be new to Breakpoint Trades, these weekend newsletters, especially mine, tend to be quite comprehensive. Again, are not for you short attention span TikTokers out there. We really get into the weeds, cover everything in depth. We go over the major indexes. We do a top-down approach, anywhere from the bigger picture monthly, weekly charts, all the way down to the daily and intraday. I have a few scenarios on the market. One of them I favor. Again, the market can do anything it wants to, but one of them I favor, and I'll discuss those. We'll go over the bond market. We'll examine the sector charts, commodities, all the commodities. We'll look at currencies, US dollar, cryptocurrencies, of course, precious metals. By the way, gold, as you know, about a year ago, I had a price target of 3,000. Well, gold hit a high of 3,056 recently. And there is some divergence now, so be careful in that area. And by the way, I did add some nice trade ideas here. Last Wednesday, I added a few ideas, and they went nicely. So hopefully you caught those. And again, my name is Matthew Fraley. I founded Breakpoint Trades 22 years ago in 2003 to provide advanced technical analysis, market commentary, trade ideas, and of course, advanced mechanical trading systems. Consider enrolling and subscribing. That way you get access to 5 detailed newsletters, actionable trade ideas, access to our mechanical systems, active community, you name it, instead of just, 1 or 2 YouTube videos a week. You're really missing out if you're just looking on YouTube. Again, guys, a lot to cover here. As far as the market, first off, last week, the major indexes finally closed up for the week. The Dow Jones closed up 1.2%, S&P up 0.5%, Nasdaq up 0.2%, Russell 2000, that's the small caps, up 0.7%. While the majority of the 21 market sectors that we cover put in slight gains, save for a few like semiconductors, consumer staples, materials, biotech, and metals. Okay. Now, so far the market has put in a trade low from the previous Thursday, that's March 13th. We favor that being a trade low for now. The market's been consolidating with the S&P 500 thus stalling around its 200-day moving average and the Q stalling around its 9 EMA. Okay. One positive I'd say is the big cap tech stocks, like Apple and Tesla and Meta, Microsoft, that have been really lagging. To me, they look like they're trying to put in little bottoming patterns here. Some of them closing above their 9 EMA, so that's a positive. Another positive for the market would be we have some end of month inflows into the market. All right. Obviously, the wild cards are going to be, the April 2nd tariffs, Putin and Ukraine. If Putin comes back and tells Trump to go F himself or something, whatever, who knows? Any of that stuff. It's certainly been a wild environment, a lot of uncertainty, which the market doesn't like. That's one reason it's sold off so strongly. And there's a few possibilities I see here, really 3 or 4. One of them I favor. So the bearish scenario is that we've put in a major high and we've had major wave 1 down and we're in a wave 2 bounce. Okay, I don't favor that, but that is possible. The other scenario, there's 2 bullish scenarios. There's there's the 4th wave. Under that scenario, we would have put in major wave A, the initial down. We're now in this wave B, and then once that's done, it'll come down again in a final C to make the final wave 4 bottom. But again, if it's a wave B or a wave 2, those should retrace roughly, 50% or more of the leg down. And I talk about that here in the comments. So, okay. The other scenario, which, if we were just to sell off right now to a new low, to me, that would put up a better bottom. So I'm going to get into these charts below, but again, this only shows up on YouTube, so if you're just looking at the web page, you won't see it. But here's an image of the S&P 500. Again, you can see how we bounced or bottomed on March 13th in that demand zone, and coincidentally, the 61.8 fib. We've had a choppy advance and been struggling just below the 200-day moving average. Okay, on Friday we closed right around that 9 EMA. Here is the, I'm trying to get this, the Nasdaq, same deal, you're in a demand zone. It's also off the lows, closing right at that 9 EMA. Now, the scenarios I'm favoring right now, and I'm using the Triple Q's 2-hour view here. So you can see the waterfall decline we had, right? That low put in a nice MACD divergence, just like on the S&P. Initial rally up the previous week on the March 14th. We bottomed there on March 13th. Right now we're in this sideways consolidation. Here I have a bullish and bearish labeling. So the bearish labeling would be in red, which I don't favor. The bullish scenario would be under green, which will break to the upside. That said, we could perhaps use a little pullback here for a wave E. So that's what I'm favoring, guys. Again, I'll get to these later. So let's go ahead and get to things. Next, item number 2 shows the index sector tables, what transpired last week and on Friday. Again, finally the index has closed up slightly for the week with the Dow leading. Okay. Friday was also an update except for the Russell. As far as the 21 market sectors, the majority closed up for the week. Again, there's a few that closed down, as I already commented. Nothing closed down more than a percentage. Okay. Currencies, US dollar, up 0.4% for the week. It also looks like it's trying to put in a little bottom here, and that may put some weakness on the precious metals, which have had one hell of a run, so be aware of that. Cryptocurrencies, Bitcoin also did bounce with the market. As far as commodities, mostly to the upside here, except from natural gas, which is down 4.4%. The index, DBC, was up 0.7%, crude oil up 2%, copper up 4.7%, uranium up 4.6%, agriculture, wheat, whatever. So big gains there. Precious metals, gold was up, closed at 3,020. Again, the high was 30.56. Remember, my target a year ago was 3,000, which was met. Silver was down 2.25%. It is lagging. The miners up 2%. And as far as the bond market, decline in the 10-year, 30-year Treasury yields. Next, item number 3 shows the economic news calendar. Last week we had the FOMC, so quite a few news items here, guys. Also end of week, again, anything from PCE on Friday, and not going to go through all these. PMI also here on Monday the 24th. Okay, let's go and jump to the index charts. So the first chart below, item number 4, here's the weekly chart of the S&P 500 with this wave count. Again, there's various scenarios, as I've commented. That said, I've been, let me look here, sorry about that. This chart I've been showing since last December. And I commented that the market's going to eventually need a pretty decent wave 4 pullback that could be anywhere from 500 to 900 points. Well, to me, this is the scenario I've been favoring for the last 3 months. So we had the initial, we broke the channel on the weekly, sold off. Under this scenario, that initial sell-off would be the initial wave A of 4. If we put in a low there, which I favor, we get a rally up. Ultimately, though, a lower high. Again, usually these as a wave B, usually these retrace roughly 50% or more of the decline down, then come down again to a new low or a double bottom, but could be a new low, then put in a better low as a wave 4, then we go up. Okay, that's one scenario. Again, there's other scenarios where you put in the major bull market top, and it's perfectly valid. I just think it's way, way, way too early to say anything like that. That said, I do think we are going to have a recession here in the future, and I've said that well before Trump got in and before all the Doge and government cutting and tariffs and everything else. So, and why did I say that? Well, because of I've seen the economy slowing, plus the yield curve was inverted for the longest in history, and that's always been the best barometer of a future recession. I'm not showing that chart tonight, but again, so this is the scenario I favor for now. Chart number 15, here's another weekly chart. Again, we had that symmetry break on the downside, 640 points. So ultimately favoring a lower high of some sort. Chart number 6, here's the monthly view of the S&P going back to 1994. Just shows you the bigger picture. This has been a great chart long term, kind of like a paint dry system for catching the ultimate bull and bear markets, especially this 14 stochastic and the 50% area when it tends to fall below 50%. That it triggers bear market territory. Again, it's never going to get you out at the highs, but got you out pretty damn good in 2000, late 2000, and before that tech bubble crash, and also in basically January 2008. It did also fall in 2000, below there in 2022. That was a bear market. But notice it's still above 80 here. So it's a long way for signaling a bear market at this point. Okay, we've been in a secular bull market since the March 2009 low. So that's 16 years, guys. Think about that. Now, secular bull markets tend to last anywhere from 16 to 25 years usually. So we're right in the low end. So it could end here anytime, or it can still go on for a couple years. Okay. Chart 7, here's another monthly view. This shows you, two. Again, I'm not a fan of moving average crossovers generally because, the lag effect. But on a monthly chart, the 8 and 13 EMAs, those are fibs, have caught the major bull and bear markets quite well in the S&P, as you can see. Obviously, they're a long way from crossing. But one thing I'll notice here is they're flattened out. You can see in the past when it flattened out, usually led to some at least sideways consolidations or, corrections, stuff like that. So they are been flattened here. Next, chart 8, here's the quarterly view of the S&P. We're nearing the end of the quarter, and remember, we might have some inflows for the end of the quarter. That's also a positive for the market. Notice this pullback tagged the 5 EMA. That's the gray dotted moving average we've been showing. That was the initial target, but this is very extended long term. I mean, look at this run, guys. Eventually, this is going to mean revert, and maybe on the next. Ultimately, if the market forms a lower high on this wave B and comes down again, maybe it ultimately comes down to the 9 EMA. Who knows? Eventually, this is going to need to correct. I mean, this is just, man. And some other bigger picture charts. Chart 9. Here's our famous VPT 401k paint dry system. I love the name. A lot of folks like this. Again, it's not for me. It's not for a trader. I think the average hold time for these trades are 2 or 3 years. But it does a very good job about keeping you in bull market uptrends for many years, keeping you out of the bear markets. And again, it's not close to giving an exit yet either. All right. Notice we did have a little RSI divergence here at the highs on the monthly chart. Again, this is right on the website. This system would be good for, say, neighbors, maybe parents or older, folks who do not trade the markets, but they have their money in the market in index funds. This is a good thing to keep an eye on. It's something you rarely have to do. It's like watching paint dry, but ultimately it's like insurance for your 401k. It will protect you from the big, deep bear markets. It's not going to catch the daily wiggles and stuff like that. Obviously, it's not designed for that, but for the bigger picture, it's pretty damn good. And by the way, I have this going back to 1920s, and it handled the Great Depression just fine. Next, chart 10, here is the daily KISS system for the S&P. Again, it did its job, as I say here. And why did it do its job? Yes, it had a losing trade there last time, but it got out, kept you out of that market correction. And that's what this KISS systems are designed to do. They're designed to keep you in uptrends with a smart trailing stop, all right, and then give you that stop protection. So if the market has a gut-wrenching sell-off, and again, even this sell-off, guys, it felt deeper than it was, right, about 10%. But man, it felt like a 20% correction, didn't it? The markets will do that. Once in a while, they'll correct 20, 30%. And, in even bull markets, they'll do that. And that's where the systems are great because they'll keep you out of that. And they'll never get you out at the highs, but they'll keep you out of that gut-wrenching sell-off. Anyway, the daily's still flat. Now, some of my faster intraday KISS systems, like the 78-minute versions, they've already been back long, but the daily's still flat. Okay. Now, on the moving average ribbon, which is always a good guide, we are getting a pinch on the underside, and it is bearishly stacked, so be aware of that. Next, chart 11, here's the 4 time frames with these custom indicators. So the daily is on the upper left. You can see, again, we had that waterfall sell-off. We also had a resistance cycle right there at the highs, and then we Sold off. We had a DeMarc 13 at the lows, very wide moving average ribbon, and we've been kind of chopping our way higher. We're below the ATR on all the time frames except for the 78-minute. And one thing I'm noticing here is prices ping-ponging very well between the cycle indicator. This is important here because when I finally see this close strongly through one of the cycles, that should start a stronger move. I really like the cycle indicator and, of course, the ATRs and the ribbons. By the way, the cycle indicator, it was originally designed in the 1970s in the audio industry to filter signal to noise ratio in the audiophile industry. So it wasn't developed for stocks initially, but it's actually pretty cool. And then someone took it for trading. There's a book called Rocket Science for Traders or something like that. And anyway, so it's kind of a derivative of that, but it also follows price action instead of a lagging type of indicator. That's why I like it. Next, moving on to the S&P charts. So chart number 12, here's the S&P daily. This is the SPY. Again, you can see how the SPY been tagging the underside of that 200-day moving average so far, stalling at that, which has been resistance so far. Again, for now, I favor that low on March 14th being a higher low. So after this consolidation, I am favoring another push higher. Chart number 13, here's the daily S&P cash. Again, we already discussed this earlier where it came into this demand zone after the waterfall sell-off. We had some RSI divergence there. Nothing, of course, on the MACD, but we've bounced off there. We've been chopping around. I am favoring ultimately a higher low here and then rally again. Ultimately, I'm looking for a lower high up here to one of these fib areas. Okay. If it's a wave B or a wave 2, it should at least retrace 50% or 61.8. Okay, because if market were to sell off right from here to a new low, then quite frankly, wave A down or wave 1 is not in. This would still be part of that. All right. So we'll see. We'll see if we can get a move up here. Again, a lot of wild cards with tariffs and Doge and, other stuff. But then, of course, economic numbers. But for now, I favor an upside move on this consolidation still. Chart number 14, here's the half-day chart I was showing last week. Shows that initial move down as a wave 1 or A. Again, ultimately expecting some sort of ABC up for either a wave B or 2 lower high. Chart number 15, here's a 2-hour view. Again, you can see we came back. We're right near this dotted downtrend line from the highs. Here I added a little line at the lows there. I'd like to ideally see that hold right around that 5,600. So if you're long, I think that's a good area to, to watch. Don't want to see that lost. Chart number 16, here's the 60-minute chart I was showing way back 2 weeks ago, right before the market bottomed. So on March 12th, I said, the S&P could sell off and make a new low, but set up a MACD divergence. That's what I talked here in March comments. I said one option is the market were to sell off from here, make a slight new low, MACD divergence would set up and could be a better trade. Well, that's exactly what happened. You can see the dotted green line. I drew that on Wednesday, on March 12th, and that's what happened. It came down there and then rallied and actually hit where I targeted. Okay. Otherwise, you can see we've been consolidated since. So let's see if we can pop higher sometime this week. And finally, chart number 17. Here's a 15-minute chart. Now just showing some of the gaps. You can see we've been ping-ponging here. We got a little of this gap from March 10th last week, but pulled back. There's a demand zone here. There's also a big open gap down here. Honestly, I don't want to see this gap filled. If we go all the way down to there, then I think we go to new lows. But next, chart number 18, here's the triple Qs, Nasdaq, high performance KISS system. Again, did its job, got out at a really excellent price, good three and a half weeks ago, way up here. Actually, a better exit than the S&P. It's still flat, of course. Now, again, some of the intraday KISS systems are long, such as this Q's 78-minute, but this daily got out really nicely, doing its job, keeping you safe. Next, chart number 19, here's the triple Q's daily standard chart. Again, we had this wedge pattern. which played out with that strong sell-off into the demand zone, bouncing up. Now you can see we closed right around that 9 EMA on Friday. So I'd like to see now a close above that. Again, first targets would be the 20-day moving average and then 200-day moving average. But ultimately, guys, if this is some sort of wave B up, it should retrace more than the 200-day moving average, okay? Next, chart 20, here's the 2-hour view. Now, this is the chart I showed early on in the video. So this is what I'm favoring here. So we made that new low, like I said, on March 13th with that MACD divergence. We've rallied up. We've been chopping sideways. So this is obviously some sort of consolidation wave. I have the bullish and bearish labeling here. Bearish would be in red, where we're making a wave E and we're going to sell off right away. Okay. The bullish case would be this green. We're working on D. Ultimately, we could use a pullback for a higher low E than rally. I'm favoring the green for now, guys, but again, anything's possible, but I favor the green. Next, chart 21, here's the custom charts. Again, similar look to the S&P, but one thing I'll point out here is the 78-minute. You see the cycle indicator? You see the ping-ponging action perfectly between the cycle, support, resistance, support, resistance, support. That's important, and I've shown this before. Whenever the price finally, instead of ping-ponging, reverse into the cycles, when it finally goes through the cycle, that's going to start a trending move. So let's say it's to the upside. We get a resistance cycle and we blow through it. That's bullish. That'll start a stronger trend move. Okay, the next leg up. Next, chart 22. Here's a 60-minute chart, just nice clean chart showing this channel, which we took out of. And after breaking out of the channel, getting to that gap a little bit, we essentially went sideways, chopping around. Okay, you can see some other open gaps above, and of course the fibs. Ultimately, on a trend move up and some sort of wave C up, you know, we should get to one of these fibs, like the 50% fib, etc. Also, guys, let's look at some of the FANG big cap tech stocks because they have been absolutely pummeled, especially Tesla. But these things need to move for the market to have higher as well. So Tesla filled that second gap. It's been chopping around. Finally closed above its 9 EMA on Friday. That's a positive. And so, you know, this looks like it does want to follow through. That said, I don't think this is the ultimate bottom for Tesla. This could be some sort of wave 3 low. So, but doesn't mean this wave 4, whatever this is, can't have higher prices first. Chart 24, NVIDIA. Now, NVIDIA, as you know, bounced off that demand zone in early March, held that. Right now, it's been struggling around the declining 20-day moving average, but looks okay here for now. Chart 25, here's Amazon. Again, it's below its 200-day moving average, but it's trying to curl up here. It needs to close above its 9 EMA. But notice the MACD here. See how I got it circled? It's crossing to the upside, so that's a positive. And we do have some positive divergence here at the lows. Chart 26, here's Apple. So big rally on Apple on Friday, closing slightly above the 9 EMA on expanding volume. It also had met its symmetry target. Chart 27, Google, closing up. It's still below its 9 EMA, but we do have some divergence here at the lows. And chart 28, Microsoft, same deal. Now, Microsoft closed above its 9 and 20 on Friday on expanding volume with a MACD cross. So this actually looks pretty good, like this could follow through. That would be positive for the market. And chart 29, Meta, still above its 200-day moving average, unlike the others. Some divergence here. So the point I wanted to show you these guys is the big cap tech stocks do look set up perhaps for higher prices, and that would help the market. Next, chart 30 here is small caps, IWM. They've been lagging, of course. They held that recent support, but anyway, overall, we'll see what these puppies do. And chart 31, here's the 2-hour view. Now, this one really interests me. You had a wedge pattern with our MACD divergence at the mid-March low, and then you set up a higher low so far. So this could be an inverse head and shoulder pattern. If so, I would be targeting at minimum this supply zone up here. Okay, so there you go on the market, guys. All right, let's go ahead and move on. look at a few indicators. So chart number 32, here's the VIX. So the VIX, as you know, closed back below its upper Bollinger Bands a couple weeks ago with that divergence. Been working its way lower. Chart number 33, here's the 60-minute chart. The only thing that worries me a little bit about the market here is the 60-minute chart here does have some pretty obvious MACD divergence. Okay, so be aware of that. Also, though, remember I said on the S&P, let me pull, or the market, let me pull up that chart again. So here's the Q's chart. Remember I said for the bullish case, wave E, it technically does need a pullback, high or low. So, that would allow the VIX to bounce here a little bit for this divergence to play out. But again, just something to be aware of, guys. Some others, chart number 34, here's the CPC. That's the options equity put call ratio. Just following up on here, I showed this way back in January, late January, when this indicator was buried. And that's always been a pretty good bottoming effect or topping effect on the market, as you can see. And it clearly was. Okay. So that played out. Another thing, I've shown this before. This has no bearing on the short term here, just showing this for the bigger picture. The AAI bulls minus bears did spike way down into bear market territory. We haven't seen that since 2022. Again, that has no bearing on the short term here in the market, just showing you this for information. Moving to the bond market, chart number 36, here's the 10-year Treasury yield. Little pullback from that wedge last week, and it bounced back late in the week. Overall, rates have been declining since mid-January. Chart number 37, here's TLT 20-year bonds. And chart number 38, high-yield corporate. They've held up fairly well, versus the market. Otherwise, they're in this channel formation. Now let's look at the market sectors. We're not going to review all of them, but review a handful. So here's XLK technology. This area has been really pummeled. So again, looks very similar to the Nasdaq. Chart number 40, here's the semiconductors. They actually closed slightly down for the week. Again, they held this support. That bounce stalled the 20-day moving average. Again, we'll see if this can form a higher low here. Chart number 41, financials. Nice bounce from that demand zone. Right now, they're around the 20-day moving average. Chart number 42, XLE utilities. One area I've been watching. The utilities have been coiling here. Chart number 43, transports. Nice bounce on Friday. Here I added a little resistance trend line to monitor. Again, all this stuff's in the gutter, guys, but we'll see if we can get moves higher. Chart number 44, industrials. Closing back above its 200-day moving average here slightly. That said, the 2-hour time frame is interesting on industrials here. Notice you got kind of an obvious inverse head and shoulder pattern. We'll see if that plays out or not. Chart number 46, materials. Very weak sector. Look at this. Pretty ugly volume here. Ugly candles. Well below its 9 EMA and other moving averages. Chart number 47, healthcare. Just kind of chopping around here. It is still above its 50-day moving average for now. Lower high, though. Chart number 48, in real estate, after bouncing back, pulling back, closing back again above its or below its 200-day moving average. You can see the last rally stalled at that supply zone. Now, one area that's been quite strong is energy. So here's XLE Energy. Again, it's been pretty whippy here, but ultimately had an ABC pullback into that demand zone and pretty much a V rally. And this sector has been doing a lot of V's, as you can see. Straight down, straight up. A lot of V-ish action, but it's been quite strong. And a lot of the names, the energy stocks have, decent P ratios, unlike the tech stocks, where you got P's of 100 and 200, etc. One of my favorites technically has been Chevron CVX. So this broke out last week. Remember, I've been showing this. That said, I really like the weekly chart, and you can see my comments. So the weekly has been consolidating here for 3 years, finally breaking out of a little range, but ultimately it's still in the bigger range. Remember, the longer something consolidates, the bigger trend move you get. So when this finally ultimately breaks out of this range, it should have a pretty good run. So I really like this one. And moving on to commodities, chart number 52, here's DBC, that's the index, weekly view, up 0.7%. Again, it's been stuck in this range for 2 years. I am looking for it to eventually break out of the range. Chart number 53, here's the daily chart. Again, we had some topping doji candlesticks back in February, which played out, but we're still ultimately above its 200-day moving average. Chart number 54, crude oil, which has been working lower since last year. It's still in this kind of wedge-like pattern. It was up last week, up 1.6%. Chart number 55, here's the daily. Essentially came down to that September support, bounced off of that for now. Big sell-off from that supply zone, of course. Chart number 56, UNG natural gas, which had a heck of a run from December. It's finally been correcting. I think it's on par to tag its 50-day moving average now. Chart number 57, copper. Copper's been super strong, guys. We had a demand zone back here in January, rally up, flagging, rallied up, formed a wedge, broke out of that. Very strong moving averages. No MACD divergence anymore, so super strong. One way to play it is CPER. That's the copper ETN. I'm sure most of you don't play copper futures. And some of the stocks, of course, FCX and SCCO. SCCO had a big day on Friday. Look at that volume pattern. Again, probably a lot of that was option activity. Remember, Friday was quad witching, OPEX. But again, should copper continue higher, some of these stocks should do well. Another one, uranium. So uranium up 4.6% for the week. This is the bigger picture chart going back to 2020. It's been in this long-term uptrend. And got a little Pinocchio move below it, but right back above it. Chart number 62, here's the daily. Got into this demand zone where it bounced off of. And of course, chart number 63, here's the monthly view. Again, I posted this chart way back in 2020. I said it looked like it was entering a bull market coming out of this multi-year base, which it did. It's been working higher, for the last 4 years. That said, I do think long term it will at least make it up to this next target. Uranium is coming more back into play, and with all the AI stuff and how, much of an energy hog that is, they're going to need more things like this. Chart number 64, platinum. So platinum is something I'm interested in long term. I am going to eventually do a dedicated video on it, but it's not breaking out or anything yet. But it is forming this 4-year coil on the monthly chart. And, the supply and demand, there's actually more demand for platinum now than there is supply. A bunch of the mines have shuttered because platinum is, it's under $1,000 an ounce now. So eventually that long-term commodity cycle will catch up and platinum will have a rally. But it's not going yet, but we're going to monitor it for you. Next, moving to crypto. So chart number 65, here's Bitcoin. It's been chopping around. Remember, it got into that little small demand zone a couple weeks ago near the lows of the market. It's bounced back a little bit. Clearly that rounded umbrella top played out. Chart number 66, Ethereum. That also got washed out, had over a 50%, about a 60% haircut. It's bounced back a little bit, but still below its 20-day moving average. Next, chart number 67, US dollar. Weekly chart up 0.4% for the week. And pretty big sell-off from that supply zone. That said, I do think shorter term it could be near a bounce point. Chart number 68, here's US dollar on the daily. You can see it came down into this kind of demand zone a little bit, trying to bounce here. Little RSI divergence here. Again, should the dollar start to rally here a bit, maybe that'll put some pressure on gold, so be aware. Chart number 69, here's a 2-hour view of the US dollar, and you can see it has this nice base, little nice double bottom here. This looks higher to me. Not a lot of resistance right here, so if the dollar rallies, that could benefit that could negatively impact the precious metals. Next, let's move to precious metals. So chart number 70, here's gold. Remember, a year ago, I pointed out this long-term base. I said gold looked like it was poised to break out and have a major rally, at least up to 3,000. Well, my target's been hit. In fact, it hit a target of over 3,050. That said, there is a little divergence showing up now on the RSI. We are in this fifth wave move, so be careful, guys, if you have a lot of gains. This isn't really an area to be, piling into gold right now. If you're not into gold and you want to be, you got to wait for a correction. Okay, maybe an area to start taking some profits. Driver 71, here's the daily chart. And again, you can see we had a tight little, we had a coil back here in January that broke out. Then we formed another tight coil. That said, we do have some active divergence forming here. Now we're still holding that 9 EMA, and we could still theoretically rally up again. But if we lose that 9 EMA, then we likely start some sort of correction. Chart 72, here's another weekly chart, just showing one of the wave counts that we were showing months ago, where that pullback was a wave 4, and we were favoring a wave 5 high, and that's been playing out. But we're in the wave 5 now. We have some divergence here, so caution is in order. Chart 73, here's the bigger picture monthly chart. So what I'm favoring right now, first off, you can see the RSI, the divergence on the RSI 5. Very wide MACD ribbon. What I'm favoring right now is some sort of wave 5 of 3. So once this ends, maybe we get a pullback into this demand zone is a wave 4. And then after that, a big rally to new all-time highs. But eventually we're going to get a pretty decent wave 4 pullback. And here's the big picture view of gold, going back to the 90s. Again, gold, I mean, God, guys, back in 2001, it was $253 at the lows. So this has had one hell of a rally since then, percentage-wise. Next, chart 75, silver. Now, silver's been struggling here. Hasn't been really rocking like gold. So it's pulling back here again. Now it's back testing the little downtrend line here. There's a little demand zone down here. Ultimately, I think silver is going to have its day, but it hasn't really been running yet. And if gold enters a correction, this may need to, consolidate yet again. Chart 76, here's the ETF SLV. And here's the monthly view, bigger picture view of silver. Like I said, we broke out of this coil last year in March, so a year ago. And we've tagged that first supply zone where we pulled back from. Long term, I believe it's going to go to the higher supply zones or retest the highs. But that's going to take some time, guys. Next, chart 78. Here, I have two of these high-performance KISS systems that have been doing very well. So at the top here, that's IAU. You can see it went long. It closed out a nice long in February. It then went back long on March 4th. And it's been long ever since with a nice stop to protect it. And at the bottom, SLV, same deal. Next, mining stocks, chart 79, GDX closed up about 2% for the week, but off those highs. Chart 80, here's GDX on the daily. Remember I talked about this area being a big support about 3 weeks ago, and it was. And I said it looked like a cup and handle forming with a cup here, handle here. Well, this has been playing out. That said, technically this still looks okay. The pullback on Friday held that 9 EMA. So this could be some sort of wave 4 of a 5. I think we're in some sort of wave 5 here, but maybe that's a little wave 4. So we'll see if we can get another pop here or not. Chart 681, here's GDXJ. That's the junior ETF. Same analysis applies essentially. And chart 82, here's the 2-hour view. So again, we don't have any MACD divergence at this recent high. So ideally, if we can get one more pop here for a slight new high, that could set up some of that divergence. Chart 83, here's the GDX KISS system, high performance, 130-minute chart. Again, it's done very well here, as you can see, going long, exiting in, going long back in early January, exiting in late February, going back long in basically beginning of March, and it's still long. Nice trade. Chart 84, BTG was this little small gold stock I gave as a long idea a couple weeks back. It's a little inverse head and shoulder pattern, which obviously played out. Hope you took some profits. That said, could this be a cup and handle? Maybe this pullback will form a handle. We'll see. Chart 85, AG. It's a silver stock, kind of a similar look to it. And chart 86, SIL. It's a silver stock ETF. Honestly, the best way is probably, if you want some of these silver stocks, is just to own the ETF. All right, let's follow up last part of the newsletter, the trade ideas. So We haven't had many trade ideas in our newsletters because of the volatility in the market for good reason, but I did put out a couple last week on Wednesday and they played out. So GE&I put this out on Wednesday, was up on Thursday, and then I put this out last Thursday, I'm sorry. And then had a breakout on Friday. And what I liked about it was the pattern. This was a very strong stock, and the volume is way above average. Now the star was AMPX from last Thursday. It's a 60-minute chart. Yes, a little low price stock. I'm not sure what the heck this is. I don't care. It was just for the pattern. You had a clean resistance at 240. But this triggered on Friday, and look at this percentage move. This thing was up 35% on Friday. So one hell of a percentage move. If you bought this and caught it, you'd have paid for your membership for the year. And look at those volume patterns. Following up on Walmart, remember this was a short idea I gave a few weeks back, which obviously played out. And here's the bigger picture view on Walmart. It's also, been finding support at this 38% fib. The point is, hope you took some profits on that short on Walmart. Here's some others. Chartber 91, SNBR. I put this out last Thursday as a long in this coil. Could also be a short if it breaks down, but it's still valid, hasn't triggered. The last part of the newsletter, here's some new long ideas. So Chartber 92, XIFR. I like the little base here, clean resistance right around 960. So I think breaking that, at least you get the 50-day. Chartber 93, Next. Kind of reminds me of Steve Jobs. His company, after he first left Apple, was named Next. Anyway, you got a nice flag here. Resistance 910. Chartber 94, DVN, Devon Energy. I like the energy names, kind of a little flag here. Good pickup in volume. Chartber 95, DOCUSign. I just used DOCUSign recently when I sold some rental property. Anyway, flagging here, resistance 8870. Chartber 96, FSLY. I like the little bottoming pattern here, look, and volume. One to watch. Chartber 97, HIMS. They sell a lot of men's stuff. Anyway, this is a 60-minute chart. I like the little basing pattern here and the volume. Look at the ribbon, how it's really, really pinch squeeze trying to curl up. This one looks good. And the final one, Chartber 98, VSAT. A little choppy here, but if it holds this low here, I'm looking for it to maybe move back to its 200-day moving average. That'd be a pretty good percentage move. And there you go, guys. So we'll see where futures open here in about 30 minutes or so. Anyway, guys, I will be having another video sometime on the mean reversion systems that had closed out. There's some that are still open. I am retooling some of those. I just want to make some comments about those. And I'm planning some other videos as well, some other tutorial stuff. So anyway, guys, enjoy the rest of your Sunday. We'll see where things are at this week. Talk to you later. Thanks.